The pandemic is costly in many ways that cannot be accounted, but yesterday we got a projection for that which can be counted, and it's billions and billions and billions. It was issued by the Financial Accountability Office of Ontario, headed by Peter Weltman, and he's with us from the nation's capital tonight to break down some of the numbers. Peter, how are you managing through all this?
Well, we're managing. We're very busy. There's lots of demand for what we do. I guess in the middle of an economic crisis, the FAO is a pretty important player in this.
Agreed. And while I've read your report, and there are literally thousands upon thousands of numbers in the thing. So we are going to highlight just a few of the numbers just so people can get a flavor of what you're reporting on today. And here is, Chad, maybe you could bring this graphic up. Here is the summary of Ontario's economic numbers. You've got the economy declining by 9% in the year 2020. That is the largest annual decline on record. Real gross domestic product is forecast largely to rebound next year, rising by 8.5%. Projected budget deficit, oh my, it is going to quadruple to a record $41 billion for the fiscal year in which we find ourselves right now. The deficit is projected to decrease to $25.3 billion in 21-22. That's still more than double the deficit from the year we just came out of. Ontario's net debt to GDP ratio rises to a record 49.7% in 2020-21. That's up almost 10 percentage points from the last fiscal year. And even with the forecasted economic recovery through the year 2021, Ontario's net debt to GDP ratio will remain at 48.7% the following year. And if we can bring up one more graphic here with some bar graphs on it, this is the forecast on 2020. We could see 2 years ago, a little bit of economic growth at 2.2%. Last year, up 1.6%. And then, my goodness, the economy this year just craters off 9%. But the hope is that it comes back to the tune of 8.5% next year. Now, if I remember my Economics 101 here, a recession is defined by 2 consecutive negative growth quarters. So technically, I guess, we're not in a recession yet, are we?
Technically, we're not in a recession yet because we did not have a negative quarter last quarter. This quarter, or this past quarter, will be negative. Q1, Q2, we're expecting to be negative as well. I pity for those listening to the podcast. That's a lot of numbers all at once. So try to help work through all those.
Okay, we'll talk some English then so people can get a break on the numbers. But so by the end of the year, clearly we're going to be in an official recession. Let me just get one more thing on the record here, which is the progressive conservatives under Doug Ford, when they ran for office, promised to balance the books by the year 2023-24. Just to confirm, that is impossible now, right?
It's incredibly unlikely. So I hate to use the word impossible because the government does control the levers of spending and revenue. We did project in 5 years' time prior to the pandemic that if the government was able to stick to its spending plan, it would have attained a balanced budget. That's incredibly unlikely now.
Can you put these numbers into historical perspective for us?
Sure. So this deficit of $41 billion represents roughly 5% of Ontario's gross domestic product. That's the largest deficit on record. The next largest deficit occurred in 92-93, and it was 4.5% GDP. And the one previous to that would have been in the 80s, and it was about 3.5% of GDP. So relatively speaking, it's the highest. In terms of numbers, absolute numbers, the previous worst number was minus 19.3 billion. Now we're at minus 41. The economy's bigger, but the numbers are also bigger.
Right. And again, because it actually hasn't happened yet, I guess the sort of nerdy question here is, how do you know? How do you figure out that it's going to be $41 billion when it actually hasn't happened yet?
That's the nerdy question, and that's why we have a very skilled team of economists and we have very well-developed financial models. So what we do is we forecast the economy and we look at all of the various drivers of the economy, the different industry sectors, look at the outlooks for those sectors, look at other people's forecasts. And we translate the economic forecast, which in our case for the first year was minus 9%, so a decrease. And then we put that into the impact on the fiscal situation, which is the resulting decrease, primarily decrease in tax revenues. And that's really where the hit is. So the tax revenues are going to be down roughly $22 billion from last year, because when you have businesses that are shut down, people aren't working, they aren't paying taxes. Businesses aren't making money, so they aren't paying taxes. And in this case, which makes it a little bit unique, is that consumer spending has been fairly obviously limited in a recession, it normally is, but people are largely buying things like groceries, which are non-taxable. So the HST and sales tax numbers are down as well.
Okay, all of what you just described, namely the tax revenues going way down, we actually have a graphic from your report to demonstrate that. Thank you, Chad. There it is right there. And if we go back a few years, we can see revenues. This is money coming into the province of Ontario's treasury at about 140 plus billion dollars, going up to 150 billion, then 153 plus billion. Even last year, pretty good, 154 plus billion. And then, wow, it just falls right off the table, 20 plus billion down. But you've got it, at least I guess the anticipation is that some of it will come back next year. Let's put another graphic up immediately after that. Chad, maybe we could put up the one called a loss in tax revenue. And this shows the breakdown for how all of the different ways that the taxpayers pay their money, how the money comes in. We've got a loss in tax revenue to the tune of $7 billion of personal income tax revenue. Sales taxes off more than $2.6 billion. Corporation taxes off more than $9 billion. And other tax revenues off almost $2 billion. Add it all up, it's $20 billion off. The percentages of declines here, Peter, that we're talking about, is this comparable to the Great Depression back in the 20s and 30s?
So the records weren't quite as fulsome back then, but it's very much on par with that. It's in the same league. So yeah, these are significant drops. So what makes this different, though, is that this was effectively a government-mandated recession. The government, by fiat, ordered the economy shut down in order to fight the pandemic. The government will reopen the economy or allow the economy to resume, which is why we're anticipating, if everything goes according to plan, a fairly rapid, in relative terms, a rapid recovery starting in 2021.
Well, that does anticipate the next question, because when the government doesn't put the economy into a recession, in other words, a normal recession, it sometimes trickles back more slowly. But you're anticipating, I guess, what they'd call more of a hockey stick recovery this time, shooting up to the stars?
Oh, there's all kinds of shapes and sizes for this recovery. So we're anticipating, and I don't want to assign a shape to it at the moment. We're hopeful that as the economy starts to reopen, that gradually we'll see the economy sort of get back on track over the course of the rest of this year, starting in kind of June. And then by next in 2021, we'll see a recovery, a fairly robust economic recovery as businesses reopen, as people return to work, and things start to get back on track again. So that would portend a much better recovery, a reduction in the deficit, et cetera, an increase in tax revenues.
I don't want to be Mr. Doom and Gloom here, but you, of course, have heard epidemiologists talk about a second wave and a third wave, not to mention the regular seasonal flu that will be coming our way come September, October, November. What will that do to your projections?
Well, we did a scenario, so we have the baseline projection, which was things get back on track in 2021, and then we have another scenario saying, what if they don't? What if things get delayed? What if we have a second or a third wave? What if we can't reopen the economy, or maybe it's in fits and starts, and we really don't see things, starting to get back on track until next January? And in that case, the scenario obviously is much worse, because you're going without the tax revenue for a longer period. People are not working for a longer period. Businesses are shut down for a longer period. We anticipate more damage to the economy. The deficit for this year won't be a lot. It would be a little bigger, about 43 billion and change, because this is the really bad year. But what happens if that really bad year carries into next year? The next year's deficit could be about $37 billion instead of $25 billion that we project in our baseline.
I think we've got those numbers standing by, actually. Chad, can you bring these up? This is stat board number 3. Yes. So this is the alternative scenario for Ontario's economy, where the real GDP declines by 9.3% this year, real GDP rebounding next year but rising only by 4.6%, not the 8 that you described earlier in the more rosy scenario. A budget deficit of $45.3 billion for this fiscal year. A deficit decrease to $37.6 billion, still massive, for the following fiscal year after that, and a net debt to GDP ratio rising above 52% for the next fiscal year as well. Now, clearly, we're hoping that's not the scenario. We would love the scenario which has the economy roaring back. At what point do you suspect your office will be able to determine which scenario we're actually going to see?
Well, that's a good question. And so it's because we model at the higher level, we're not really able to get down to the level of counting how many businesses are open and how many people are returning to work. And we don't have any visibility, obviously, into weekly sales of these businesses. So it takes longer for the data to sort of reach the level at which we can start to work with it. So we intend to be coming out more frequently with these sorts of reports. We're gonna do something in September, a similar type of report to sort of look and see what's happened now. I mean, for example, there have been some government announcements federally and provincially in the last week and a half that aren't captured in this report. So in fact, spending has gone up just a little bit relative to what's in this report. Things are moving very quickly. It's an unusual, extremely unusual situation. So for that, we're going to try to become reporting a little more frequently, and it'll help MPPs really try to stay up to date and ask the questions they need to ask of the government.
Is it accurate to say, regardless of what jurisdiction you're in anywhere in the world, is it accurate to say that if the basic fundamentals of your economy were solid going into this pandemic, they will likely again be solid coming out of it?
That's the hope, and likely if they're solid, the foundations of the economy are still there. They're still strong and functional, and there weren't other issues going on. Then the idea is the idea is you try to come out of it on that same basis. And the reason for a lot of the government programs and a lot of the support programs that are being put together now by the federal government is to try to keep people and businesses whole, so that in the short term, so that when the recovery starts to come and the pandemic starts to ease off, they can resume sort of normal operations much more quickly. If they had to go longer, and a lot of companies could run out of cash, and then they just cannot restart, and all those folks that used to work there have no jobs to go back to. So that's what we call structural or permanent damage to the economy. And ideally, because our economy was in reasonably decent shape, I mean, there are a few areas that it wasn't, but reasonably decent shape, we hopefully can come out of this in reasonably decent shape.
Okay, you know I'm going to ask the next follow-up, which is, do you have any idea what percentage of companies are unlikely to survive this pandemic once it's over?
Unfortunately, the report didn't look at that, and we don't have that kind of data just yet, but that is something that we're actively researching. We might be able to put something together for the next report on that.
Now, we know that while the Ontario budget deficit you're forecasting is north of $40 billion, the federal budget deficit, and I know this is not your bailiwick, but I just want to do a little comparing and contrasting here, they're looking at a budget deficit north of $250 billion. My question is, whose books at the end of this are actually going to be in worse shape, Canada's or Ontario's?
Well, Ontario's will be in worse shape if you measure it relative to GDP, so relative to the size of the economy, because Canada is starting at the federal government is starting at a lower debt to GDP ratio than Ontario is. However, I think it's important to keep in mind that distinctions between federal net to GDP and provincial debt to GDP is fine internally, but if you're external looking in, you're going to probably count all of the government's debts relative to the entire country's GDP. And you're not going to, as an investor, you're not necessarily going to make that distinction between federal and provincial. The other thing that's important to add too is that the federal government net to GDP basis is actually much better than most developed economies, most OECD countries. So the federal government does have the ability to borrow more money and to fund a lot of these programs without putting itself into really serious jeopardy.
But if you added up all of we're going to get super nerdy here. And again, forgive for those listening on podcasts, we're going to dump a bunch of numbers on you here. If after this year, the debt to GDP ratio for the province of Ontario is going to nudge at 50%, do you know what it's going to be for the federal books?
I think it's something a little bit below that. I don't have that off the top of my head, but it'll
Okay.
be somewhere, and it'll be a little, but not a lot less than that. It'll be somewhere in that neighborhood,
And if you took
45-ish.
all of our jurisdictions together, which is one federal government, 10 provinces, 3 territories, add them all up together, you're still saying that relative to the rest of the world, even though the numbers are going to be historically high, we're not going to be, you know,
Not quite as
there's,
bad. I mean,
there
we'll
is
be
a
in the
return.
there is a return. We'll be over 100%. We'll be probably 125. But if you think about it, Japan's at 250. The U.S. is going to be very high. I mean, Italy is well over that. So while it's not a great scenario, it's still relative to other developed economies, it's still okay. And that's important because as governments look to borrow to fund these deficits, their okay fiscal positions or their okay debt positions will allow them and allow investors to have more confidence in buying those countries' bonds.
You know, the conventional wisdom in Ontario back before the previous election, so we're going back to the time when the Liberals were in power, the conventional wisdom was always 40% debt to GDP is the ratio that you really, that's the ceiling. You don't want to go above that. Well, clearly, because of this pandemic, we're blowing past that. We're going to go up to 50 right now.
Yeah.
But can you tell us whether 40 is still the target that we ought to be aiming at in terms of reducing our debt to GDP ratio?
That's a really good question, and that's a question that we actually wrestle with internally. It's a question I know the government is trying to figure out as well. So there isn't really a magic number because there's a combination too. There's not just the level of debt relative to your economy, there's also how much interest you're paying relative to your total program spend. And while our debt is going to go up fairly significantly, our interest expense isn't really going to rise that much. So because interest rates are historically low. So we were paying about 8 cents on every dollar for interest right now. That'll shoot up to about 9.8 next year, and then it'll come back down to about 9 cents the year after that, assuming our baseline scenario unfolds. And if you compare that federally anyway to back in the 80s, where interest on debt was consuming somewhere around 33 to 35% of program spend, really 8 or 9% is manageable.
I do remember back in what they used to call the glory days, and I'm talking now about when Bill Davis was Premier of Ontario, and our net debt to GDP ratio was, I think, about 11 or 12 or 13%, which is a far cry from the 50 that we're about to encounter right now. There was also the question of our credit rating. How credit worthy did the ratings agencies find the province of Ontario? It was always AAA back in the day, or almost always. Any indication of whether what we're encountering right now will affect that today?
Well, that's another interesting question. Normally, if we were the only ones in the world running this sort of deficit, it would be an easy answer. Yes, the credit rating will get downgraded. But we're not the only ones in this situation. So on a relative basis, I'm not sure that our overall rating will be different, relative to it may be that's a question obviously for the credit rating agencies to determine, and they may downgrade the debt, they may downgrade the rating because of the worsening fiscal situation. But we won't be the only ones who will be downgraded. Everybody will be downgraded on that same basis. So relative, as I said, to other jurisdictions, Ontario is not really going to change.
Is part of your mandate to make recommendations to the government of Ontario as to how they can bring forward policy prescriptions to deal with this new reality?
It is not. It's very clear in the legislation that we are to provide analysis and we don't make recommendations. What we try to do with the analysis is we try to frame questions that MPPs can ask of the government or suggestions that they can make to the government to look at policy prescriptions. So for example, the government has announced a certain amount of spending in the last budget or in the last update in March, and coupled with the economic downturn, we've been able to put a forecast that says we're going to run a $41 billion deficit next year or this coming year, which allows MPPs to look at it and say, okay, government, we have a problem here, we have a problem there, or maybe we don't. How are we going to tackle this? So it gives a reference point, if you will. So anything from here on in, if there are policy suggestions made by others or by our elected representatives, they'll be able to weigh that against the current fiscal situation, which we provide in our analysis.
But just so I'm clear, it's unlikely that your phone is going to ring anytime soon with either the Minister of Finance or the Premier calling you saying, Peter, we got a $41 billion deficit. What do you recommend we do to get it down to a more manageable number?
Well, I think the phone may ring. I mean, the phone rings fairly regularly. And it's not that I'm inviting those calls, but I suspect that I know, for example, the House passed a motion this morning that the Standing Committee on Financial Affairs is going to have a much more in-depth look at the sorts of things that can lead to recovery. And the FAO is going to be, or has been requested to supply that committee with additional analysis on various components that the committee may come up with. So during the course of those those discussions, the committees may throw policy ideas at us, and we will come back to them with, maybe the cost or the fiscal impact of those policy ideas, and we will be very careful to stay away from recommending what the actual ideas should be.
Got it. In our last couple of minutes here, I guess the reason I raise it is because there's already some pretty intense intergenerational rivalry going on in our society. And, I have had numerous conversations over the last 2 months during this pandemic with younger people who are in their 20s and 30s who are, I guess, mortified at the notion that in order to pay for all this money that we're borrowing right now to protect people during this pandemic, it almost certainly guarantees that when they get, 5 and 10 years down the road into their careers, their taxes are going to go through the roof to pay all this back. That's what they're worried about? Is that likely to happen?
Well, that's a good question, but I think it's a legitimate worry. I think we're taking on all this debt. It will take a long time for this debt to get paid off. If interest rates remain historically low for the next 10 or 20 years, it won't be as quite an onerous burden as it otherwise might be, but there's no way to know what interest rates are going to be that far out. So yeah, it's a risk. I mean, I have kids in that generation, and I hope that the work that I'm doing can help inform policy to make Ontario an attractive place for them to stay and work. And so I get it, and I am also concerned about that.
Yours is a relatively new institution in the history of the province of Ontario, just a few years old, but I do have to say your reports are really must-reading, and we really do appreciate the fact that you take our calls and come on this program to explain it to our viewers and listeners as well. So take care, Peter Weltman, and you be well during this pandemic, okay?
Thanks, Steve, and you too. It's a pleasure being on. It's a pleasure to have the opportunity to explain what we do.
Thanks very much. That's Peter Weltman, Ontario's Financial Accountability Officer.
The Agenda with Steve Paikin is brought to you by the Chartered Professional Accountants of Ontario. CPA Ontario is a regulator, an educator, a thought leader, and an advocate. We protect the public. We advance our profession. We guide our CPAs. We are CPA Ontario. And by viewers like you. Thank you.